Welcome to Mr.M Talks. This channel is update share market information day to day. Today topic, Warren Buffett, huge inflation. Economics with insights from one of the greatest investors of our time, Warren Buffett. Join us as we dissect his valuable commentary on inflation, government policies, and strategies to protect your finances in a rapidly changing world. Buffett's candid observations paint a vivid picture of the current economic landscape, characterized by the specter of inflation. He notes with concern the substantial surge in prices across various sectors, sounding alarm bells about a sudden uptick in inflationary pressure that caught many by surprise. Buffett illustrates the gravity of the situation by emphasizing the relentless ascent of housing costs and the ever-escalating expenses related to steel. He underlines that these day-to-day expenses are spiraling upwards at an alarming rate, significantly impacting various industries. According to him, this is indicative of an economy that's not merely heating up but turning red-hot unexpectedly. Moreover, he elaborates on the ripple effects of these price hikes. Despite initial expectations of demand slowing down after certain economic stimuli, the trend continues to persist unabated. This has led to an intriguing phenomenon where consumers seem undeterred by the escalating prices, resulting in a buying frenzy. Consequently, industries find themselves grappling with an unforeseen backlog in their operations, struggling to meet the surge in demand. One striking aspect that Buffett highlights is the peculiar behavior of consumers amidst this inflationary surge. Despite rising prices, people seem not just willing but also eager to accept and accommodate these increases. He points out instances where buyers are not dissuaded by the soaring costs, instead, they exhibit a willingness to wait for extended periods, adding to the backlog in deliveries across several sectors. This unique scenario, where demand appears relatively unshaken by rising prices, poses a challenge for businesses. Buffett reflects on how companies grappled with uncertainty when reopening after lockdowns. Contrary to expectations, the surge in demand persisted well beyond the anticipated endpoint triggered by the discontinuation of certain financial aids like the $600 payments. This extended surge in demand continues to surprise businesses, contributing to the backlog that refuses to diminish. In a sense, Buffett paints a picture of an economy operating in an unanticipated manner. Despite predictions and historical economic models, the relentless surge in demand, paired with the willingness to accept inflated prices, continues to drive industries into uncharted territories. This unusual trend not only challenges the norms but also showcases the resilience and adaptability of businesses amid unprecedented economic shifts. Through his commentary, Buffett not only points out the impact of inflation but also lays bare the complexities and nuances underlying consumer behavior and its influence on market dynamics. This discourse serves as a stark reminder of the ever-evolving nature of economies and the challenges they present, urging stakeholders to adapt swiftly to these unanticipated shifts. Buffett's insights delve deeper into the varied impact of inflation on different businesses and sectors, revealing the contrasting fortunes they face amid this economic upheaval. He observes a tale of two economies within the overarching scenarios of inflation. On one hand, certain businesses find themselves thriving in this environment, adapting swiftly to changing consumer behavior. These adaptable businesses, as Buffett highlights, have managed not just to weather the storm but have capitalized on evolving consumer habits. Whether through innovative delivery services, adapting product lines, or embracing digital transformations, these adaptable enterprises have found avenues for growth amidst inflationary pressures. However, on the flip side, Buffett sheds light on the struggles faced by other businesses. For many, the unexpected surge in demand, coupled with supply chain disruptions, has resulted in challenges that extend beyond mere financial strains. He narrates instances where businesses grapple with the daunting task of managing backlogs that seem to grow relentlessly, leading to a strain on resources and logistics. These companies, despite their efforts, find themselves unable to keep up with the unanticipated demand, leading to frustrations among both consumers and suppliers. Buffett's anecdotes and observations underscore the complexity of how inflation impacts businesses differently depending on their adaptability, preparedness, and the nature of goods or services they provide. While some thrive through innovation and flexibility, others face hurdles in adjusting to the rapid changes in consumer behavior and market dynamics. Additionally, Buffett emphasizes the role of economic disparity amid inflationary trends. He highlights the dichotomy between businesses that cater to changing consumer needs and those that struggle due to a mismatch in their offerings or the inability to meet the evolving demands of the market. This disparity manifests in various ways, from businesses that successfully transition to online platforms to those facing closures due to changing consumer preferences. Ultimately, Buffett's insights offer a nuanced understanding of how inflation impacts businesses and sectors diversely. His narratives serve as a reminder of the importance of adaptability, innovation, and foresight in navigating through economic upheavals. This highlights the need for businesses to not just survive but also evolve and innovate to thrive in an ever-changing economic landscape marked by inflationary pressures. Warren Buffett delves into the realm of government policies and the looming specter of mounting debt, offering a thought-provoking analysis of their potential impact on the economy. He expresses cautious concern about inflationary consequences stemming from current fiscal policies. Buffett highlights the measures adopted by the government to stimulate the economy, acknowledging their immediate benefit in boosting business activities. However, he warns about the long-term repercussions of these policies, particularly in fueling inflationary pressures. The eminent investor raises red flags regarding the increasing external debt and its implications for the value of the dollar. Buffett paints a picture where borrowing from other nations might eventually prompt policymakers to consider repaying these debts with devalued dollars. This scenario, he notes, is a classic tactic to mitigate the impact and cost of external debt, albeit at the expense of the currency's value. Buffett's discourse offers a stark reminder of the delicate balance governments must maintain between stimulating economic growth and managing inflationary risks. He underscores the potential pitfalls of accumulating excessive debt and subsequent challenges of repayment, which might lead to the devaluation of the currency. Moreover, Buffett's insights shed light on the interconnectedness of government policies and their trickle-down effects on the economy, emphasizing the need for prudent fiscal management to avert potential long-term economic repercussions. His commentary serves as a cautionary tale, prompting policymakers and economic stakeholders to carefully evaluate the trade-offs associated with stimulative measures and escalating debt values. Buffett's observations highlight the critical need for a balanced approach in formulating policies that foster economic growth while safeguarding against the adverse impacts of inflationary pressures resulting from mounting debt. Warren Buffett offers invaluable strategies to shield oneself against the erosive impact of inflation, emphasizing the importance of proactive measures in safeguarding financial stability. Foremost, Buffett underscores the potential of individual earning power as a robust defense against inflation. He asserts that regardless of currency fluctuations, one's skills and expertise remain invaluable assets. By continually enhancing one's talents and expertise in their profession, individuals can secure a portion of the economic pie irrespective of currency devaluation. Additionally, Buffett advocates for investing in robust businesses resilient to inflationary pressures. He extols the virtues of owning a stake in businesses with enduring earning potential, particularly those that do not necessitate heavy capital investments. Such businesses, he notes, possess the capacity to withstand inflationary storms and maintain purchasing power over time. The eminent investor's advice revolves around the concept of investing in oneself and in businesses that exhibit enduring earning capabilities. He emphasizes the superiority of these strategies compared to fixed-dollar investments vulnerable to erosion in value due to inflation. Furthermore, Buffett's counsel stresses the significance of honing personal skills and expertise as a means to secure a steady share of economic output. He underscores the enduring value of one's capabilities, which transcend fluctuations in currency value. In a sense, Buffett's guidance offers a multifaceted approach to mitigate the adverse impacts of inflation. By prioritizing personal development and investing in resilient businesses, individuals can fortify their financial positions and weather the challenges posed by inflationary pressures. Warren Buffett's profound insights into the complex series of inflation culminate in a compelling conclusion that encapsulates the essence of his observations, offering valuable takeaways for navigating the ever-evolving economic landscape. Buffett's discourse serves as a poignant reminder of the intricate interplay between inflationary pressures and their diverse impact on businesses, sectors, and individuals. His vivid depiction of an economy grappling with surging prices and evolving consumer behaviors underscores the unprecedented nature of the current economic climate. At its core, Buffett's wisdom revolves around the pivotal importance of adaptability and resilience. He underscores the resilience displayed by certain businesses in adapting to changing consumer demands, thriving amidst the turmoil caused by inflationary pressures. Simultaneously, he highlights the challenges faced by businesses struggling to meet the unexpected surge in demand, emphasizing the need for agility in an unpredictable economic environment. Moreover, his emphasis on individual earning power as a shield against inflation resonates as a timeless piece of advice. Buffett advocates for continual self-improvement and skill development, viewing these attributes as invaluable assets immune to the erosion caused by inflation. In conclusion, Warren Buffett's insights serve as a timeless testament to the importance of adaptability, resilience, and continuous personal growth in navigating the ever-changing economic tides amidst the challenges posed by inflationary pressures. Below information is educational purpose only. Please subscribe and support my channel.